Daljeet, good afternoon. First a view on L&T numbers, quite strong. It was a very ignored stock, and that's why a relief rally.
Good afternoon, Pankaj. You can say that because people are not expecting this kind of EBITDA margin from L&T. Now, but if you have to go into detail now, today everybody is believing that probably L&T is a barometer of industrial growth, and you will find that economy is reviving. Is that all happening? My belief is little different from that, because we have not seen the similar kind of numbers in Thermax or Cummins or other infra companies. So if you see the details of L&T numbers, you will find that the divisions that have worked well for them have been only roads and these road related projects. So that is where and we all know that for last 1.5 years, that is the only ministry which has been in the limelight for doing something besides power. So that is why I think they've got this, and the base was too small, so obviously they've got it. To assume that this kind of 14% margin will remain there in next quarter also, and when the other divisions start working, will these margins remain, I think is little difficult to fathom. Now markets are in a mood to accept everything good right now, so it's good. In any case, at 1200 it was a fair price, or a little underpriced stock. So today's rally has given that gap, it has narrowed down that gap. I would not be a buyer at current price, maybe at a lower price like it was available yesterday or day before, some 1200 odd rupees. It would have made some sense to look at it.
Right. How would you look at Cummins India? Now the con call is going on, and there's some news flow came in where the stock went down 10%. Now it's down about 5 odd percent. Any view you have on Cummins India?
We don't cover that stock, so I won't give any rating or any recommendation. But I think that there's news flow regarding what if they will not go for an increase in capacity if the order flow comes, and rather shift it to the parent company, which is an unlisted one. So obviously it will spook the markets, because people are not expecting that when the bad times were there, the investors were with you. When the good times come, then you say, then we'll shift our things to parent company, which is unlisted, so you won't get any advantage. I think that's not a good management practice. It's not expected from a company of the stature of Cummins. I don't know in what context they made that statement. I did not hear that call, so I'm unable to give a judgment on that. Probably we'll have to read that call transcript again and understand what actually they meant by saying that, and what is it really in store for the minority investors. Since we do not cover, so we don't have a recommendation on Cummins.
Right. I think there has been some confusion, regarding this particular news flow. And you think one has to, as you said, you'll have to again hear that call. That is something that, would be advisable.
Yes, I think that is a better thing to do, because normally you won't expect this kind of thing coming from such management. They have never shown this disinterest in the minority shareholders. So I don't think that they would have meant by saying this that they will transfer anything to the parent company and you won't get the advantage of that. Probably the interpretation would have been wrong, or the choice of words would have been wrong. So we'll have to look for it, read the transcript, hear the call again, and get a better understanding of the entire matter.
Right. And if there is no change in the policy or very minor change in the policy, there is no reason to worry.
Absolutely, yes. That's right.
Right. So, we saw Ashok Leyland declaring numbers. L&T declared great set of numbers. BHEL, of course, is a different animal, but the numbers were, not that bad. Do you get a sense that, there is a sense of recovery which is coming in? Because these are, stocks which are related to the economy. So do you get a sense that some sort of bottom is being made, or some execution is picking up?
See, when we talk to the managements, we don't get that feeling. In the numbers also, I don't see that kind of, the way the stocks are reacting is much more euphoric than the actual numbers showing that kind of thing. As I said, if you go into details, you will find that in L&T case, out of 5 or 6 divisions, only 2 are making money, others are all losing money. So obviously there is not that kind of recovery which is expected. Now same thing in other cases, in Thermax, in Cummins, in all other companies we've seen. Now BHEL, if you talk, now it has already gone down to so low levels that from here further lower cannot be possible. So probably there is some small thing which you can treat it as a green shoot, and you can say that now it is all built in. Now, so it's basically the interpretation and the perception that investors are now taking. Maybe just that because of long haul of bad news and pessimism, people are again coming back to this. But again, whether this will sustain or not is again a matter of question. I think we'll have to look for more data and see whether this proof is there or not, whether this is continuing over the period. Till now, the commentaries have not been very good. Till now, our meetings when we go to the clients or when we go to these companies and talk to their vendors, we don't get that feeling.
Right. FMCG particularly has done well. Again, not commenting on any particular name because it's different company-wise company. But you would look that at least consumption is picking up because Dabur declared great numbers, Marico declared great numbers, Havells showed a pickup. Are you getting a sense that at least that side of the market is doing well?
They are doing well. In fact, for them, there is a ray of hope from monsoon and then from the 7th Pay Commission also. So I guess they have better times ahead. But the numbers that you are looking at they are at the bottom line and at the EBITDA level, not at the sales level. Volume growth has been muted. Volume growth is not that big. Now, because our expectation is 4% and they give 4%, then we say it is a good number. Now, that doesn't mean that 4% is the required growth in sales volume for these companies. So what is important is that top line is not coming, sales is not coming. Margins are coming better because the commodity prices were low, and in the last few quarters all these companies have tightened their belts, so they have already been able to squeeze wherever they can, and the result, cost efficiencies have been built in. So margins have come in. Now my fear is that actually in next few quarters, if the sales don't come and this benefit of commodity prices and this cost rationalization will not be available, so that is the time when there will be a bigger problem. So basically for these companies to continue doing good, they have to have the sales growth pick up. And for that, the ray of hope, as I said, is monsoon and 7th Pay Commission. If these things play out, well, they will be able to do it better. Otherwise, I think there will be a correction in these stocks.
Right. What did you make of Lupin numbers, Daljeet? You've been tracking pharma for really long. You think comments deserve that sort of correction?
See, yes, I think comments deserve that sort of correction because there was a big hope built around the company. Just to give you an example, FY16 we were all working with something like 50-55 rupees EPS, depending upon various analysts. And for FY17, the EPS estimate before the result was 70 rupees, 75. That means 50% kind of growth in an year. Now that was to come from what? From new launches, from this Gavis acquisition and other cost rationalizations, etc. Now when we actually, after the commentary, after the analyst meet, when you come and you start reworking on it, building in the higher R&D cost, building in the depreciation amount of double than what it was in FY16 because of the amortization coming from Gavis, and building in almost double the interest. In fact, interest cost has already become 8 times of previous year. So that that kind of run rate, if you put in for FY17, then your earnings growth will come down to only 5-10%. So 55 will probably become 60-65. So now the hope was 75, which has come down to 65. So obviously the earnings are going down. When these kind of things happen, then the P multiple contraction also happens. The stock which will be trading in a good time at 24-25 times will come down to 22 times. So both the things together definitely will have the impact on the pricing. So stock price definitely was supposed to go down. I think it has gone down. There is some more scope, and then on top of all this, there is that overhang on Goa facility, which is a critical facility for them. So I think that is it deserved that kind of treatment. It has happened. I'm seeing a little some more downside, say around 1400 levels. Probably at that time it will become a stock to look at.
Right. Don't you think after around 1400, 1450, it is coming in a valuation comfort zone? Or if the earnings growth, as you pointed out, which is taking a cut or maybe muted, valuations, even if they are attractive, there is no reason to buy immediately?
See, it again will depend. If you will not have other alternatives, then or the market sentiment is that you want to go for defenses, you might look at Lupin at 20, 21 times, 22 times. It's not a bad stock to look at, and you can have it, because ultimately these problems will be solved and finally the numbers will come. So Lupin, by all said and done, is a very good company, very strong product pipeline and a good pedigree. So they have been showing that performance. So there is no doubt at all on all those parameters. It's a temporary hiccup where they are stuck in Goa facility, and these depreciation and interest and all these things are year-on-year effect. Next year onwards, you will say that this is a normal thing. So I guess it is only some time you will have to give. At 20 times, 22 times, it will become attractive. Now, what will happen is that probably people don't want to go at this time in defensive stocks because there are other alternatives available. So say in tomorrow, after a few months, if you don't have that many alternatives, again you will start looking at it. So I think Lupin at 22 times is not a bad stock.
Right. Jubilant Life declared numbers. You have earlier spoken about that name. Did you like the numbers? The reaction, however, was negative.
Yes, reaction was negative, but I think numbers, there was nothing bad. The reaction was negative because the reported number itself was lower than the expectation. Now that was because they had taken a one-time charge of amortization of some product-related intangibles. So that is why the earnings have gone down. But otherwise, if you see at top line and EBITDA level, they have performed just in line with expectation, and in fact better. On the margin side, we had expected that pharma business margin should come around 20 to 25% level, and LSI business, which is the chemicals business, should be hovering around 15%. Both the divisions have shown that kind of. So our thesis to buy Jubilant was that the earlier what had happened in last 1.5 years, 2 years, that pharma division was not doing at all anything. In fact, it had a loss, and then the chemical segment was doing only 4-5% margin. So our thesis was that now that pharma problems are over, they will come back to 20-25%, and pharma LSI segment will also move from 5 to 10-12%, and which is what has happened. So I think the stock is, the company is doing things in the right manner, and it should perform over a period of time. There is nothing wrong. We maintain our buy rating and the target price of 494. At current price of 345 also it is available to you at 6.5 times of FY18 EV to EBITDA, which is quite attractive. Normally it should trade at around 8 times. That will give you a target of 495.
Right. Another name that we have spoken about which has done well is Make Money Organics. Do you still cover that name? Do you like that name?
Yes, it is under our coverage. It has already crossed our target price of 34 rupees. Now we are waiting for target price to be revised. In next couple of days we should get their numbers. We are expecting numbers to be better, much better on the top line, on the bottom line side as compared to top line, because top line we all know that crude prices have gone down, so all the chemical prices realization has gone down. So top line may be actually muted, but the bottom line would be much better. EBITDA margin as well as the net margin, both should go well. And on top of that, if the commentary is, because this company has last year given a guidance about, they had a 280 crore debt, and they had given that over 3 years they will repay that debt. First year they have already paid some, I think 100 odd crores. They are supposed to pay, 80 crores, and then now they are supposed to pay 100 crores, and then they are remaining. So if they continue with that guidance and they are able to give that assurance that this debt repayment will happen, I think the stock will continue to perform very well, and we will have a reason to re-rate it upwards. But we'll wait for the numbers. There's no point revising target today and then 3 days later or 1 week later there will be numbers.
Daljeet, thank you so much for taking out time for us. Always a pleasure.